What's up, everybody? Joe Brown here. This is the Heresy Financial Show, and there is massive fear in the markets right now. Extreme fear. We haven't had this much fear in over 2 years in the markets, and every time we've seen fear get anywhere near where it is right now, we've experienced a market rally shortly afterwards. So that's what we're going to talk about in this video, diving into the Fear and Greed Index and what we might expect from the markets moving forward, at least temporarily. Ready? Let's dive in. All right, guys, so CNN puts out the Fear and Greed Index and updates it daily. Take a look with me here at this gauge. So we can see today, I'm recording this on Friday, we are sitting at extreme fear at a level of 12. Now, Thursday, this was at a 6, so that was the most fear that we've seen in the last 2 years. And the day before that, it was sitting at 8. And so suffice to say, we're experiencing extreme fear, and it's broad. We'll go into how this is broken down. 1 week ago, again, still extreme fear. A month ago, fear. And 1 year ago, we'll look at was also fear. But right now, we're experiencing some extreme fear. So first, we're going to break it down and see how they look at this and how they measure it. Number one, they look at market momentum. And so the blue chart here is the S&P 500, and the orange line is the 125-day moving average. And we are seeing extreme fear based on the momentum of stocks recently. We're seeing the price stay consistently and significantly under the 125-day moving average. And so the moving average is obviously just the last 125 days of prices averaged together. And if the price is significantly under that moving average, that means that your momentum is going down. The next thing that we're going to look at, that they look at, is stock price strength. Looks at the net new 52-week highs or lows on in the stock market, and we can see here very low. This is showing extreme fear. Next, we're going to look at breadth. This is looking at, hey, is this driven by just a couple stocks in the index or most stocks in the index? And we are seeing, again, extreme fear based on this measure as well. Market breadth is very weak. The next thing they measure is the put and call options. So they look at the 5-day average of the put to call ratio, the volume of puts versus the volume of calls. If you're not aware, a put is the buyer of a put has the right to sell a stock, and the buyer of a call has the right to buy a stock. And so the put to call ratio is a measurement of sentiment in the stock market. We can take a look here and see really since November, so for the last 6 months, this has steadily been on the rise, obviously with some volatility, but we are seeing with the put to call ratio right now, extreme fear in the markets. The only one that's neutral right now is the VIX. So the VIX and the VIX's 50-day moving average, really neutral right now, historically speaking. We'll take a look here at the longer-term chart of the VIX. And yeah, longer term chart of VIX here, we're not seeing anything crazy. Obviously, since 2021, we've experienced just a higher level. Since 2020, we've experienced a higher level of volatility on average as compared to before that. We were experiencing, lower amounts of volatility on average until 2020. But still, given the last couple of years, sitting at 28, that's not crazy. All right, and next they look at safe haven demand, given the difference in 20-day stock and bond returns. Stocks outperforming bonds up top, and then bonds outperforming stocks on bottom. We can see here by this metric, again, extreme fear, there's large safe haven demand. And we have experienced some level of correlation between stocks and bonds, selling off together. But recently we've experienced a little bit of a divergence there. Might be a buying opportunity for treasuries, as if we have more and more economic pain, more and more money might sell risk assets and move into bonds like treasuries. So we saw the 30-year kind of top out here at 3.3%. And the 20-year top out here at 3.5%, and have been moving down. So we'll see if that trend of yields moving up here has actually reversed, or if this is just kind of a bear market correction. All right, and then finally, they look at the junk bond demand. How much demand is there for junk bonds? And they measure that by the spread of junk bonds versus investment grade. And again, extreme fear by that measure. Now, given what we know about how this is measured, it's a fairly straightforward way to measure if there's fear or greed in the market. And by pretty much every measure, there's fear or extreme fear. And so this is a contrarian indicator. As Warren Buffett says, buy when there's blood in the streets, even if it's your own. And this could very well be an opportunity to buy the dip. Even if it's just a temporary reprieve, even if it's a bear market rally, there's a high likelihood that we see some sort of a rally over the coming days and weeks. And I will show you why right now. Let's take a look here at this chart. This shows this is the overview of what we have right now in terms of fear or greed. This is the timeline of where that index. So we're sitting at 12 right now. We can look at the last 2 years and we can see what this measure has been over the last 2 years. So we're going to look at a couple of dates. We're going to look at July 19th. We're going to look at August 19th. We're going to look at September 20th through October 4th. We are going to look at December 3rd. We'll look at January 27th through March 8th. And the reason why we're looking at those dates is because that is when fear peaked in this fear and greed index. You can't really get much lower than 6. And you can see here the last 2 years. Yesterday on Thursday, that was 7, I guess, is where it ended the day at. When I looked at it, it was 6. But it hasn't been that low in the last 2 years. We haven't had that much fear. So that's a peak in fear, absolutely. So we're going to look at those dates in the market to see what happened following those peaks in fear. July 19th is up first. Let's go look at July 19th and look at that. July 19th right here. What did we experience for the next month and a half after July 19th? We experienced a nice little rally in the stock market here. So number one, that's the first one, spike in fear or peak in fear, then a rally in stocks. What's the next date? We saw August 19th. Okay, August 19th. And look at that, August 19th. Peak in fear was a bottom in the markets. We had a nice little rally after that. All right, what's the next date? We're going to look at September 20th through October 4th. Where is that? September 20th, right there, through October 4th. So lots of fear building in the market during this time. Yes, there was a spike there, came right back down while fear was still, during this time, fear was still building. And so we were moving kind of down and sideways, and then massive rally here following that big peak in fear. Okay, next peak in fear was December 3rd. So let's go over to December 3rd. December 3rd we see right here, December 3rd. And again, spike, retest, another rally here. So from this peak in fear, we moved up. All right, now let's look at the next peak in fear, January 27th through March 9th. Let's go January 7th. It was right... Wait, was it January 7th? I'm sorry, January 27th was right here through March 8th. All right, January 27th right in here through March 8th right here. So in this time frame, stocks were volatile, spike, drop, but they were moving down on average, and fear was doing the same thing, spiking, dropping here. And during that time, as fear was building and staying at that peak, stocks were volatile, moving a little bit down. And then once the fear relieved, we had a massive rally here. Now, the reason why it's significant that I'm pointing out that we are at an extreme fear level that we haven't seen in 2 years is because it makes something like this or something like this a little bit less likely. The extreme fear that we experienced in January, the index was only at a 20. So you had lots of room to move down into more fear. You don't really have much room to move down from 7 to build more fear. That's about as fearful as you can get, which means that the contrarian indicator of how much fear there is in the market right now means that there's a very high likelihood we have a big spike from here. So this is a big deal here that we're experiencing so much fear. This is a contrarian indicator. This is indicating, hey, everybody who had to sell has sold. Everybody who's not going to have to sell is going to be holding on here, and they're not getting shaken out. And so the trend will likely reverse. Now, who knows how big this relief rally will be? Who knows if we have a melt up from here? Who knows if it's just a couple of days up, a bear market rally to trap in some buyers and then another dump from there? That's absolutely possible. And so this is not trading advice. Make sure that you are keeping your position sizing, keeping your risk where it needs to be, protecting yourself, whether it's with protective puts or with your position size or with specific type of orders like stops. Make sure you are managing your risk. This is not investment advice, but right now could be an opportunity to capitalize on the massive selling that we've seen recently. We haven't seen this much fear in a long time. Buy when there's blood in the streets, even if it's your own. As always, I really appreciate you guys. Thank you so much for watching. See you next time.